Good morning, ladies and gentlemen. Thank you for joining our webinar today on building a lasting business family legacy across generations. My name is Tissy, and on behalf of the Heritage Partnership, I'm very pleased to welcome all of you this morning. Now, to those who are joining our webinar for the first time, just a very brief introduction about the Heritage Partnership. We are a partner practice of St. James's Place Wealth Management, a UK FTSE 100 company with more than 270 billion Singapore dollars of funds under management as at 30th of June, with offices across the UK as well as Singapore, Hong Kong, and Shanghai. Now, we host a range of webinars that provide our valued clients and community with insightful wealth and financial planning related content from different subject matter experts. But today we will deep dive into the topic of generational and succession planning in family businesses, focusing on trends and challenges that families are currently dealing with, especially in the face of COVID-19 pandemic. So here are some of the key areas that we will be focusing on today. Now, I'd like to inform you that this session will be recorded, and the recording will be made available on demand after the event so that you can rewatch it at your convenience. Now, we are very honored to have Professor Annie Koh today to moderate our discussion. Now, for many of us in the related industries, Prof. Koh does not need much introduction. She is a Professor Emeritus of Finance Practice and the Senior Academic Advisor of Business Families Institute and International Trading Institute at Singapore Management University. Now, she serves on boards of a number of companies and is also very passionate in her work in advising family enterprises and startups in their transformation journey. Now, Professor Koh is joined by our esteemed group of panelists today. We have Noor Quek, Founder and CEO of NQ International, Von Leong, General Partner of Purpose Venture Capital and Philanthropy and Legacy Planning Advisor, and our very own Dr. Daniel Brunner, Partner at the Heritage Partnership. So we will begin our discussion between our speakers, but we'd like to keep our 1 hour session very interactive. So at any time, please feel free to pop in any question you may have in the chat box, and Prof. Koh will pick it up as we go along. So by default, all your audio and video should be turned off. But at any time you have any question or would like to be put on camera, please raise your hand and we will send you a request to activate the function. So without further ado, I'll hand it over to Professor Koh to kickstart the discussion. Over to you, Prof.
Thank you very much. Good morning, everyone. And I love it. You know, don't you think we all look so good? We are still celebrating National Day, all right? And so the tones of red and white, I'm sure something is white, all right? And I'm delighted to be here when TC and Daniel suggested having this topic, as it resonates very closely with a lot of things that we are doing at Business Families Institute. So I am very delighted that we actually have a sterling panel. Now, what I'm going to do is I really would like this 1 hour to be very interactive. So even as the panelists share, you can start typing the questions in, and I would definitely want to cover as much ground as possible, engaging with all of you. I thought it would be a great way to start by looking at the past, the present, and the future of what it means to build a lasting family business legacy. I think the word build is critical. Nothing comes by chance. And many of our founding families that are on this call and that we've been working with, they've all worked very hard to be where they are. Likewise, this panel, I'm going to introduce them in a very different way. I'm going to ask them a little bit about, given the background that they've come from, what were some of the needs and why they think coming from that background and the platform that they have set up, it will address some of those needs. So I'm going to start with Noor in no particular order, all right? It could be the youngest first, so Noor is coming on first. And Noor, you know, amazing background. It's quite happy to actually have you on the panel because we know each other so well, but we've never quite been on a panel together. And Noor actually has experience in a broad range of banking, financial advisory, in investment banking, in private banking, in corporate finance for over 40 years. And then in 2007, she felt very strongly that she really needed to do something that would add value by setting up NQ International. So maybe Noor, can you tell us what motivated you to set up NQ International? And what are some of those needs that you feel through this platform you could address much better?
Thank you, Annie, and thank you to all of you for this opportunity. It's a subject much spoken about, but I think going forward, people are trying to find viable solutions. And one thing to remember is there is no one answer. Every situation is different. Why I got into this business, I was one of the first private bankers in Singapore. And those days, private banking was not what it is today. It was a natural move as people acquired wealth for them to think how they're going to put it, where they're going to put it, how they're going to keep it. So to answer your question in a very simple way, Annie, what motivated me initially to start NQ International was the clients. I had an opportunity to head the family office of a very, very big group at the age of 57. I was thinking, where am I heading? Myself. My children are going to get married, I'm going to have grandchildren, parents are aging, what do I have to do for myself? But hearing the clients, I realized helping them to plan their wealth was one aspect. What then? How do you help them keep that legacy, their dream going? And what they thought would happen, they'd start a business, some out of a necessity because they'd lost their jobs. They never realized they'd be where they are today. And there are many stories like that. Two, the children will take over. And you know, being Asians, there is a tendency for the cultural aspects also to decide who's going to take over the business. It didn't work out 40 years later for many. Children wanted to do their own things, or they want to do it differently. So my challenge today is not only helping people look at the nuances. I never saw the pandemic. That's a new set of issues to look at, but also to make sure that what they have built, they are able to continue into the future. And I want to stress, legacy is not only about money. So my byline in the company is failing to plan is planning to fail.
Wow. Thank you very much. You see, what a great way to introduce their background. And I'm going to jump to Daniel. Daniel, I'm going to put you in between the two ladies, yeah? So, you know,
thank you.
Get ready to be hit either way by either one of them. Daniel, I know from your background too that you have a lot of experience in private banking, wealth planning, asset management, and you've actually also worked for an independent asset manager in a multi-family office based in Zurich. So, great. All right. And my question for you is, once again, you know, having seen and gone through so many European families and also out in Asia, St. James Place is your current stop, and you actually are heading something called the Heritage Partnership. So what are you hoping to achieve from this platform? And where were some of the needs coming from Europe and Asia that you think through this platform you could help address?
Well, thank you very much. First of all, I'm honored to be on this particular panel with all of you as the only male. It's really a pleasure to do this with you today, and thank you very much for participating. Coming to your question, Professor Ko, first of all, as you rightly mentioned, I was dealing with European and Asian families over the years. And actually, the needs they have are not that different. But my feeling was at the time when I left the bank in 2016 and came to Singapore to join an independent asset manager, that the bank was not really, and that's not just the bank I was working for, but other banks I was also dealing with, were not really following a mindset which really meets the demands of these families, and it goes in a similar direction as Noor pointed out before. This has been very different, let's say 20 to 30 years ago, and now the approach over the last, let's say 10 to 15 years has completely changed. And this is why I believed to be, first of all, on the ground here with an independent asset manager and a multi-family office makes me really much more closer to these families, to understand their needs better. And it also the independence to give them an unbiased advice was one of the main motivations for me as well to do this. Now, having joined the Heritage Partnership as a partner, as you know, which is a practice which has been set up within St. James's Place, there I can actually bring together the best of both worlds, because we do have a very sophisticated platform, and at the same time we are in a position to provide independent, unbiased advice, because we do not have any in-house solutions or products to sell. So that gives us the independence we need. At the same time, we have the sophistication of the bank when it comes to the platform, to the information technology, to the resources we require to serve these families. So based on this, I'm now in a position to serve families and clients in an independent manner, and also to make sure we can introduce a goals-oriented approach to them. So working towards achieving their goals, and that should be in line in what we are trying to achieve as well as a partnership.
Very good. Just a quick reply will do. Why St. James Place? The people were asking me, you're all at Cluny Court, so what is St. James Place?
Okay. I mean, I would say in the UK, St. James's Place is a very well-known brand. It's the largest independent wealth management firm in the UK, which doesn't belong to a bank. So there, it's of course very well known. Now, I have to admit, I'm a client myself at St. James's Place. So that's how I came in, and one of our partners actually is taking care of me very well as a client. So, I think St. James's Place is now growing very fast in Asia as a brand, because there is a very strong commitment towards the region, as you pointed out before, and also Tissi mentioned our offices in Hong Kong, in Shanghai, and now here in Singapore. So I think St. James's Place follows this particular independent approach. It's not an independent asset manager, but it is an international financial advisor following an independent approach.
Great, thank you very much.
That's what really is the most appealing for me.
Good, and you eat your own cooking, you know, so you're a client. I remember. Right. Great. So Vaughn, thank you very much again for being here. You know, many of our audience today are also what we call the next generation leaders. And I know you have been very much in the space of looking at how to help the next generation be a strong leader, but you're currently the GP, General Partner, in Purpose Venture Capital. So again, very sterling background. I know you have been in government, you've been an ex-regional director at Aon, and so on. So what makes you pivot to where you are, and where you think are some of the needs that you could help address from where you sit as General Partner in Purpose Venture Capital?
So I'm glad that Prof has asked me to describe my past a little bit. So to clarify, I have been working with families in a very different capacity. As a management consultant, where my training is organizational psychology, I was trained in leadership assessment, leadership development, succession planning. And so my very first specific role was actually hired by a private equity firm, where they then acquire a significant stake in a family business in Hong Kong. That was back in 2009. And they wanted to bring this business to IPO. And the family business, from the board to the executive team, were mainly family members, including extended cousins and in-laws. Mm-hmm. And I was tasked as a psychologist to help them to rethink and transform, right? So that includes setting up professional structures, from executive compensation, long-term incentives, to how they manage their staff from going. It was a 3-year project. That was my very first experience. And then the second experience was with another private equity firm in Cambodia. And I realized that every family is different. Every family business is very different, despite they might have the same goal. For example, they want to get to IPO, or they want to expand their conglomerate or their business. So that was my first encounter. And later on, when I came back to Singapore to join the government in healthcare and social sector, I was working with philanthropists. They were thinking of, instead of building wealth, which is through business, which I was helping in the consulting space, I was then helping philanthropists about thinking about how to build a stronger legacy and involving their next generation into giving. And they want to bring a very specific family value and place their mark, if you like, into their community through their giving efforts. So that was my very first time when I was working there at National Council of Social Service as a director there and supporting that and having those very interesting family discussions. So it's a very totally different spin. So one is about acquiring wealth through business, and then one is about building your soft power and your family legacy through giving. Where I saw the gap was there was a rising trend of the next gen where they are very interested in impact and sustainability. They are questioning how we give and how we invest right now.
So I'm going to hold you there, Von, because I have a place for you. So there's a place cut there.
Yes. And that's when I started to think about setting up Purpose Venture Capital to leverage that network to then help them to invest into tech ventures that would deliver on UN SDGs. So this is where my evolution, has happened.
Perfect. So the audience will probably know why we have this sterling panel now. So I'm going to go to the present. Last 18 months, I think many things have changed other than working from home. I think a lot of the psychology part, the mental strength part, and the intergenerational conversation part. And I think even trends in investing have been changing. And I think Daniel saw some of that in his recent survey. So I'm going to go back to Noor. So Noor, has it been a awakening call the last 18 months? And you mentioned right at the start that when you set up NQ International, it was again putting family as the focus. So let's go back to the last 18 months. If you were to put the family as the focus, what are some of the challenges that you've encountered and what are some of the solutions that you would suggest before we talk about the future, before talking about going forward?
Thank you, Annie. Actually, for many of the clients, and when I went up to the leadership role, I did look after the clients directly, but was always in contact and my team would take care of them. What I have, and for many of them who've been in business for 30, 40 years and have their household family name on the walls of big buildings, they've seen crisis. I myself have seen 6 crises, and out of these crises, opportunities developed. But this crisis was unforeseen. The way it's happening is unreal in many instances, and we will get through it. We will become much better. But what has thrown families off is the subject of mortality. Many families used to think the older ones have a shorter lifespan than the younger ones. That may not happen. The other thing is when we had crisis before, most crises were either regional, so one region is suffering, another is not. This is global. And it's seeped through business in a way you cannot imagine. Border restrictions, never mind the work from home, which is a big issue, by the way, and which should have been addressed with technology from the beginning. We thank the pandemic for pushing this subject through. Okay, so for families, what it did is a serious wake-up call about the basic things that one has. One being, especially in Asia, communication. You know what Asians are like. You cannot tell mom or dad, that's a stupid idea. You have to say, well, yeah, it's quite right, but I often ask my elderly clients, when are you going to stop being father in the office and chairman at home? What has also changed in this pandemic is more of them are now beginning to talk, including the women. And you know, diversity is a huge, huge plus point. And what I personally find when I started Incubation, even until today, people like Yvonne and I find it inspiring. At this early age already, they are looking at life. What more the future? So the whole idea now is to get them talking to, you use the word, I think you were talking about changes. I would use the word transformation.
Nice.
Because some of the businesses would not be recognized the way they are. Sustainability is a big issue. CSR and ESG. I mean, you know, look at the number of plastic bags we have at the moment. Look at what is happening in the world on weather. And until and unless there's devastation, it's not going to wake some generations up. And so I think there are huge lessons to be learned. They are being learned. The spirit of cooperation, and above everything else, to me, the key word in all of this today is leadership, whether it's at family, government, or corporations. If leaders don't change, it ain't going to happen. If leaders don't speak and walk the talk, it ain't going to happen. It's got to be a complete, this time it's global. It's got to be a complete change of mindset. And included in that is the need to make sure that when businesses go down in families, the family wealth is still intact. Just one other thing, it's a simple issue also of making sure the education the children take is relevant. So this is where I see we're heading today.
Very nice. So don't waste a good crisis. So this crisis has locked everybody together. So you might as well address the elephant in the room and start talking. I'm going to come back to you in a while. What are the things which you say is wake-up call that they must do something about? Yeah, so that would be the future piece. And I think you are thinking along those lines already. But you finish up the last sentence just now is, even wealth management's got to change. So Daniel, you know where I'm coming to now. So you had seen some trends, and you have seen wealth are also getting created by new wealth owners, but also wealth being disrupted and transformed and taken away. And so people have to come to a realization that we have to rebuild in a very different way. So what are some of the trends that you're observing, Daniel? And what, what came out from this 18 months that have tremendous value learned for many of our families listening in?
Okay, first of all, as has already been mentioned by Noor, this whole pandemic has been a major disruption, not just for the economy, but for the society as a whole worldwide. And of course, this has a consequence. Nobody has really expected that. Who would have thought 2 years ago that a thing like this is going to happen? Literally nobody. Nobody was really predicting it. Nobody with lots of knowledge on trends and markets was predicting such a disruption. So now, of course, yes, we have to deal with it into the future, and there are certainly trends. Annie, you were referring to the study we actually did on clients' perceptions in Hong Kong and Singapore in terms of their wealth management expectations, and especially on the topic of advisory. And one of the results that came out was that still quite a substantial part of the participants mentioned that they're not really using active advice for their wealth management needs. They're acting more in an ad hoc manner in terms of making their decisions here and there, seeking opportunities in the markets, but they're not really following a structured advisory process. So this is certainly a trend, because it also came out that they would be interested to have such a process in place going forward, a goals-oriented advisory process, to make their wealth more secure and more safe into the future. Because of course, lots of money has been lost, but also lots of money has been recovered. But the awareness that we're living in a very unpredictable world has also increased. So that is certainly a trend, and of course a duty for us in the wealth management business to tackle this particular trend, and to make sure we can live up to it as an industry. And there again, independent advice is important, unbiased advice, and not product selling in the first place. So I think that's a major trend. Of course, we can see all the well-known trends nowadays, investing in ESG, environment, social governance, related investments. I think also something Vaughan has indicated, which is her speciality, is really, the purpose investing as a purpose, finding a purpose in investing, not just for the sake of making money, but for the sake of doing good, for the sake of giving back to society. And I think this is something in particular that family offices more and more are seeking to do when it goes now into the second and the third generation, and the handover of wealth from the first generation here in Asia, which is a huge amount of wealth that's getting transferred over the coming decades. So these are the main trends in my opinion. I can also mention digitalization, which we all know. I think digitalization is a tool for us to serve clients better in the first place. Digitalization on its own doesn't add any value, but as a tool to serve clients better adds a lot of value, because you can streamline processes, bring down cost structures, and so on and so forth within the organizations. And you can involve clients more in the decision-making process when it comes to investments. So I believe, to summarize, these are the main trends I see at this point.
Very good.
Maybe just one final point, Annie, if you allow me.
Sure.
Relates to the revival of inflation. And I think this is a serious topic. Some people are saying it's just temporary. My personal opinion is it's not temporary, because this time around, all the trillions that get invested worldwide to support consumption, to support consumer and goods markets, have a direct impact on prices, as we can see. So it's very different from 2009, where the banks were pumping money into other banks, or the central banks were pumping money into other banks, and has no direct impact on the real sector. Or a limited impact on the real sector. Well, now the money goes directly into the real sector. So that's why inflation is much higher now than it was at the time of the financial crisis, where everybody was surprised that there is no more inflation. So we have to deal with this as well. And as a most recent study has shown, as an upcoming trend, family office, ultra high net worth individuals are planning to go back into stocks from cash. So that's an interesting development as well to see.
And in a while, when I talk about the future, Daniel, you're going to look at that, all right, crystal ball for us, okay? So you will get used that. So nobody in this audience will leave without some advice from you.
Thank you.
We'll come to you, Vaughan. And so I believe, you set up Purpose, all right, venture capital. How long has it been already?
Well, as a company, we are formed only January.
Bingo.
But as a private investor, venture investor, I've been doing this in the last 2.5 years. In fact, I have a new feature interview at SG Innovate for those who are interested to learn more about my profile. I think what is more focus is that because after I joined the government, I went and became the Chief Digital Health Marketplace. I know the space and the gap in the society. I see it at first hand. And as you know, in the pandemic, I co-found Mask for All Singapore that advocated for mask wearing, and we were distributing that to the community. So I have the first hand of running a non-profit, giving out grants to social enterprises and non-profits as well, seeing how inefficient sometimes they are. And therefore I question what sort of impact can we amplify and scale, and what can private capital do now that I have spent a bit more time with the families. So this is why I fill the gap with Purpose Venture Capital, especially after I joined IBM running the AI digital transformation project. I then have a first-hand front row seat of the potential of technologies. So I want to put all these things together, and against what Daniel was talking about, there was a rising demand for ESG investments and high-tech ventures because as a hedge against inflation at the low rate environment. So naturally, they're significant on the family. If you ask them today, they want to think about putting more investments into alternatives, as well as high growth ventures like venture capital and private equity. If it aligns with their businesses. So what I found is that, interestingly, it's a perfect area for families to consider in investing in high-tech ventures for purpose, with a dual benefit, which is they can preserve or enhance their family legacy, the value they want to bring, that sense of entrepreneurship, by encouraging their next generation or the successes they are growing to look at companies from the lens of an investor. And sometimes when they take that significant stake, they will then sit on the board, or they start to actually operate with the founders, or they become the co-founders themselves. So, so that becomes a great leadership development platform, especially, I was from the training or psychology background before. So beyond that, they also can see an outsized financial return because that investments will have a way to scale their investments. So this is why I thought it's a sweet spot to support some of these families if they want to consider venture capital or private equity, and how can I, as a tech management consultant, bring this together in front of them. But of course, this must be aligned with what the kind of legacy they want to build, meaning what is the purpose of the business growth and how you want to align and complement your existing business. That lens needs to have first, while having that conversation about what sort of growth do you want to enhance, and therefore, is this the right investment for the family to take on? Of course, now, more and more families are asking family office professionals to look at investments like this. Yet, I find that the next gen are becoming very proactive. They actually would now proactively search and source for deals themselves, while complementing and working with their own family office staff, or working with somebody like me.
Okay.
So this is a very interesting dynamic now that we are seeing.
Yes. So that's very nice, because I'm going to do your future now, and I'm looking at the time. So, and then I'm going to open for Q&A. So start typing in Q&A from my audience. So you guys covered fantastic. We've got this rich folder of challenges, experience, and an opportunity to turn and not go back to business as usual. We can actually refresh the way in which we are going to look at family values, family partnership, looking at investments, and looking at the next gen development. So I'm going to come to you first, Noor. So what do you think one or two very important things to do going forward for families?
I want to continue with the 3 Ps. we talked earlier on, both Daniel and Vaughn also, and then I touched on technology, and we talked about AI. I'm a macro person. I do not advise my clients on products or projects are quite different, but you know what to get into, how the balance sheet should look like in terms of specific products. We don't do that. But the 3 Ps are people, processes, and then comes profits. And we're talking about sustainable profits, okay? People. We often hear between ourselves, and as I mentioned earlier, you know, Asian families, we're quite sensitive about how we put issues forward. By getting a professional external advisor who can give independent advice and work with on a B2B basis with all the other advisors, at least you're hearing another voice. That's people. There are companies, for example, even in the Middle East, who will not allow their children to get into the family business until they've acquired a minimum number of years of experience, come out of a certain institution and worked with certain financial organizations and get interviewed independently, not with family members at the beginning. This kind of independence is good, not one who will just say yes to the family members only. The second thing is processes. We get down, therefore, to tech and digital, which means that you could probably have lesser people working, but more efficiency. And I believe in the 2 AIs. One is the AI we know, which Daniel and Vaughn, you know, alluded to, which helps us to see trends and so on. The other thing is putting our hearts in it. If you have an AI on a restaurant, for example, who comes in at what time, but you then realize that people with wheelchairs are not there, do you ask yourself, did you provide a ramp? You know, so using the heart in interpreting tech is important. And the third, and that is therefore processes. When that happens, profitability will set in. So going ahead, I'm going to make sure I continue with what I started with, having helped them grow, make sure the mindset changes are narrower, making sure they readdress the issues of transformation and fitting with the environment. And last but not least, making sure the legacy continues in philanthropy and in helping, not just with money, but with the heart and the mind.
No, you're not going the other way so easily. So I see a question that come up, which is asking about, you know, succession planning. Do we actually have a solution for that? Because, you know, many of the young people, just like you say, in Middle East, they recommend that you should work outside. What if they work outside and they don't want to come back? You know, Annie, because of the time constraint, I've not gone into these details, but the short answer to that is, if you trust your family, it's there. Do you want to be part of it? There are many young people who love their families, but have their own aspirations. If their heart is not in it, it will not. But it doesn't necessarily mean it won't happen. I've had that experience recently with a client who had a multi-billion-dollar real estate portfolio. The son came back from the US. He was talking to all the advisors about REITs, about making sure the balance sheet separates from the business. The father woke up in the middle of the meeting and he said, "What, you're still discussing it?" And the son explained, he said, "You mean your father and your grandfather starts this business and you want to change it?" They, of course, had a discussion. And I pulled both aside. I told the son, "You've lived away too long. You should have at least mentioned to your dad what you're going to raise." As for the father, I said, "Are you really going to let go?" The long and short of that was they did reconcile when the old man had an illness and the son stepped in. So on the subject of succession, get them involved in the family values early. That is important. B, try and see whether an aspect of their skill set can be used in the business, but with no forcing. And C, if they see progress and they want to make sure the money is there, let them come in. And D, press on with diversity and age. Press on, it works. Women's views and men's views brought together make 1 + 1 = 11. Very nice. So we will have a lot of this to talk about. I saw another question come in, and just nice for you, Daniel. So the future of investing. And there's one that now asks, how do you de-risk investments that's primarily directed towards social impact funding? I think that's more for Vaughn, so I'm going to keep that for Vaughn. Yeah. For you, Daniel, what advice are you giving now to intergenerational wealth inheritors? Do they invest differently?
Yes, yes.
In what way?
Yeah. I think that the priorities differ to some degree. If you look at the first generation investing their wealth to keep it sustainable, to keep it growing, their main solid investment principle was invest into property, real estate.
Wow.
That's number one. Maybe I mean, also in Singapore, I believe, but across Asia, I believe property, it's really first generation. That's the one that has been preferred. Then second, of course, the usual investments into the markets, be it fixed income, be it also equities. But then now with the younger generation, when they come in, it's just an observation I made. They are, and that goes in the direction Vaughan has already explained, they are very much interested to invest into startup companies, into new technologies, into upcoming trends in the healthcare industry, in the IT industry. They want to use money for that. So that, in my opinion, can lead to conflicts with the older generation, where they believe this might be too risky, or you're putting family wealth at risk here when you do this kind of investment. So I think you have to find the right balance. And what's very important is what, of course, Noor mentioned, how the family gets along with each other and how they can find common ground, because both investments have its place within a family office allocation strategy. So usually the way they do it is to invest maybe 20 to 30% into venture capital, private equity, and then invest 30% into property. And then you have other areas such as the regular discretionary management, which what we do in an independent manner. And you have also other areas depending on their interests, which could be gold, could be art, could be even wine. All these investments, illiquid investments, are coming up. I think it's a thin line here, and you have to find the right balance based on the interests within the family. And I think there needs some compromising to be done also when you allocate the assets. And this can only be done through a professional family office manager that also acts to some degree as a mediator in many cases, to bring these interests under one roof.
Very good. What about Bitcoin and crypto? Where does that come in?
That also comes under venture, of course, still, in my opinion, comes under venture. But of course has its place in an overall allocation within a family office, must have its place nowadays. And it's clear the younger generation, they want to invest in crypto. And even in blockchain technology, meaning companies, startup companies supporting the technology.
Okay, so then that leads me to you, Bon. So 2.5 years of advising families in venture, starting the purpose vehicle. What are you seeing for the future? Because in many ways we have the not passive, but we have the income preservation attitude and looking at stability. And we also have the transformation needs that needs agility. So you have to actually balance between that stability, agility, and then at the same time, trying to look at investments in totality and yet having a social impact. How do you sit there now with a family and tell them how to go about doing everything? Everything that Noor has suggested, all the good stuff of building a legacy, but at the same time pivoting and making sure that your pulse is with the new trends and the new tech.
I believe that right now, right, most of the next gen is rather engaged in impact, sustainability, and technologies. In fact, most of the time when they come to me, the first conversation is, I've looked at this and I want to invest in this. But I also need to have a discussion with my mother and my aunties, and cousins, about how am I going to do that. Now, because I'm very focused in supporting on the investment side into the ventures, I spend less time with this person, this gentleman, in having that conversation with the aunties and
you
the
will
moms.
send them to know, right?
Maybe. Let me explain. Because I used, when I was assisting the private equity firm in that 3-year project, I found the very first thing you need to do is set up a family constitution. You must be very clear. Do you want your in-laws in extended family to be part of the business and part of the investment committee? Including when you set up the family office. So regardless if you go to Daniel or no, the family driver in this case, when we were talking to the father who was the founder of the business in Hong Kong or Cambodia, the first question we asked is, how are you going to allocate your assets, and how are you going to set up the family constitution? Be very, very clear about that. Have that strategy in mind first. Then think about what sort of technologies would enhance your existing business, because if you can't even grow your core capability, which is actually about enhancing your current wealth and expanding your wealth, then you can't even have an intelligent conversation about the future. Because because it's all ideal situation. So I have read about this, but how are you going to apply that in your business? So this is where my management consulting lens comes in. Yeah, okay, AI is exciting, but what does it do for your current business? Yeah, synthetic biology is exciting. Well, what does it do for your business? So those are critical questions you need to ask. And how does it enhance your family legacy? Now, that kind of questions needs to set up first before they can come to me and say they want to co-invest with me. Because I can't have a conversation with a co-investor or family office when they have not decided on the asset allocation, at least from the basis of purpose venture capital. Of course, as an independent consultant, I then help them to look deeper about how that will enhance their giving and their family legacy by what sort of technologies they should be investing into. So that's 2 separate conversations. But those 2 conversations needs to be concurrent.
Very nice. Are you able to give a very quick response to this question that's just come up? So what are the key reasons that families should go for IPO? I don't think we need to go there. A lot of different reasons, but what do you see as the key challenges for the family companies when they go IPO?
They must understand that the public markets is extremely challenging and a lot of scrutiny. They can't stay private and transparent. So their personal, social, and family business will be open to almost all, right? So if your family for the past 3 generations has always stayed private, and now with VCC structure and with the family office set up in the different hubs like Singapore and Hong Kong, you'll find that most of these families would like less people to know more about who's on the cap table of their different companies, for example, and the structure. You must be prepared. That mindset is, I'm going to need to be a little bit more transparent. Okay. Of course, that it is not a all or nothing approach, meaning you can have some holdings into certain investments that you don't want the public to know. And there's a legal structure with it. I'm not expert to talk about that. I'm very aware of the kind of structures that's available in Singapore and Hong Kong, for example. And you could get that set up.
Okay.
And that's not a difficult approach. But the most important thing for your critical success is how are you going to make your family be very comfortable about being more transparent, that includes about enhancing your own personal social profile. This is why some families started to stir into giving and be a lot more visible about, you know, showing how they are being a corporate citizen, a corporate player, and that's why I'm here to help.
But thank you, Ron.
May I make a remark here, Annie? Just maybe the downside.
I was going to do my last round.
Okay, on the IPO, because the downside is really, you know, if you go public, you will feel the pressure from the market, and that will lead to short-term thinking, quarterly reports and all these requirements, and that might have negative impact on the family business. Or the business family, as Annie, you usually say.
Yes.
I think there are many pros also for not going public, because that encourages long-term thinking and again independence, in my opinion.
So Annie, Daniel said that I need to say what one client told
James
me.
Space will do another 1 hour discussion about IPO.
Okay, but I need to say this is very important, because what I heard from one client told me that what he believed and observed in his history of success of going both public and private is that he has a very good structure, but is that to go through good times and bad times, ownership stability is number one factor. So he makes sure he make that happen through a structure that works for his family as well as the legacy he wants to enhance.
Yep, very good. You see, I've just given you the next webinar. All right. I would love to quickly round up. I am sorry, but I'm watching the clock, and TC always remind me the role of a facilitator is to make sure that, all right, we honor the timing. So I'm going to do a last round and 3 minutes, all right? Each one of you allowed 1 minute. So going back to our theme, building, which means taking a lot of work, a lasting, which means it has time in mind, business family legacy across generations, which means men, women, age, all right, no differentiation. What word of advice would you give to the audience with that title in mind? No, we start with you.
I think that it is very important as advisors that we take that role seriously. I have advised also in talking to the financial institutions, and for all of us who are advisors, to constantly upgrade and update our information. We don't know everything. We must not be shy about saying, I'm sorry, I don't know, let me check. Okay, the learning and development aspects are critical, because if we want clients to be transparent, the questioning process must be such that you don't have just closed-ended questions. Open-ended questions, bring a colleague if necessary. If you're in the bank and you're an RM, it's not your client, it's the institution's client. Remember that, that's a responsibility. So to me, it's learning and sharing and educating, including the families. And the young ones have their ideas, the older ones have. Our role is to listen and to suggest the most viable. There's no one answer to a question.
Thank you. Thank you, no, very good. And Daniel, with that theme in mind, what advice do you have to many of our clients listening in?
Yes, and first of all, I fully agree with Noor. There is no one answer to this, but I can just see two angles to build a lasting legacy. First of all, it's of course the family business. There it's crucial to make sure you have capable people in place to run this business and to manage this business, to further grow this business. And if it's not someone from the family, then so be it. So the family needs to have the courage to appoint someone from outside if no one else is able or capable to run the business. And then the second angle is, of course, coming down to the business family as such, where I believe it's important to have a family office set up in place. But a single family office is very costly. So ideally, It might be a multi-family office where the family gets treated as a single family office in an existing infrastructure, and can rely on expert advisory, can rely on a structured process, planning into the future, making sure the family wealth gets well managed. And there again, it comes down to the guidelines in terms of the asset allocation. As I said before, I believe there is room for a number of different asset classes. It's just the challenge to find the right balance into the future and to be flexible once adjustments are required to secure the wealth into the future for the coming generations.
Thank you very much, Daniel and Vaughn. 1 minute.
I think what is most important for families to be aware that there's a reason why it's called a family business. So family comes first, right? So in families is relationship and trust. And a sense of purpose as a team. You need to get that right first, then talk about the business that you want to grow, preserve, and how you want to pass it on to your next generation. What I admire about the two clients I worked with back in those days as a consultant, and also recently with some co-investors, is that they are very aware that until they get their family, together and make that communication platform happen, then they will be able to do a better job in their family office or their business, and then be able to invest in the future, the kind of future they want for themselves, for their generations, for their children, as well as for the society.
Very nice. Thank you very much. You know, I love Noel's piece, and you know, I'm not going to repeat them here, but when I asked for your last round, you are all very amazing because you actually talked about the soft side. And so culture and courage, I really picked up those words. And I think those are very critical because that soft side is actually the hardest, taking it at the family level. But all of you are also amazing in looking at the talent piece, the people piece. So I hear loud and clear, capabilities and communications, 2 more C's. So you know where I'm heading, but I'm giving you pairwise C's. So culture and courage at the family level, capabilities and communication within and outside of the family. So you really need to tap on a lot of other people other than your family members. And the last C, all of you represents collaboration and commitment. The journey is not going to be easy. Every one of you have to pull the weight, and all of you are actually natural partners. I could almost see connecting the dots and bringing all of you together to help the whole community. So that's another C. So on that note, thank you very much. An amazing panel. I'm going to pass the mic back to TZ. TZ, back to you. I think
Thank you very much. Thank you very much, Prof, Vaughn, Nor, and Daniel for the great sharing. So everybody, as we've come towards the end of this session, we just need your help to complete this very short survey just to share with us how useful and relevant this session has been for you. So you should see the survey right in front of you right now. Please take a moment to just complete these 3 questions, and we'll give it a few seconds more. Now, in the meantime, just to let you know that this webinar is the first in a series of events to explore this particular topic, so we'll be sure to keep you updated for the next one. But in the meantime, do share with us in the survey if there are other areas that will be of interest to you.
Thank you.
So let's just give it a few more seconds. Okay. Thank you very much. Now, as mentioned at the start, the recording of this session will be made available on demand. So the access link will be sent to you by email within the next couple of days. So after tuning into the session today, you may still have some more questions, feedback for the speakers, or require more information about what we do here at the Heritage Partnership at St. James's Place. Please feel free to email us at thp@sjpp.asia. Now, either Daniel or other senior partner would be happy to get in touch with you. And to learn more about the Heritage Partnership at St. James's Place, you can visit our website at www.theheritagepartnership.asia. And do follow us on social media to stay updated on our latest insights and upcoming webinars. So once again, thank you to Prof. Nicole, Noor, Vaughn, and Daniel for the great sharing. Thank you to all of you for joining us today. We'll see you next time.
Thank you.
Thank you very much.
Everybody.
Thank you.
Bye-bye.